Good morning, everyone. Happy Tuesday. Hope you all are doing well. Let's take a look and see what's going on with Bitcoin for the day. So, getting another bearish candle going down to our order block here, right around 62 600-ish is the top. You can see here our low was 62 700, so kind of front ran it by $100. We could still get down there. The only thing that is kind of sketching me out now is the fact that we are starting to test the 4-hour 200 MA quite a bit. I definitely don't want to see us close below this. So if we close below this, um, it definitely gives, a potential for us to move a lot lower. That being said, what's interesting about this week is that would mean that basically there is a chance that we get a just a full-blown bearish wipeout to the downside, which would be around in this area. Um, I would expect then a bounce probably come Friday, but it's just going to be a bearish candle and it will basically bounce from the basically probably right around here, and it might bounce a few $1,000s back up, but it still will be a bearish close. Um, Now, the only saving grace that the bulls have for right now is the fact that tomorrow could reverse price. I was talking about this. So the FOMC meeting is our main Fed event for the week, and there's a potential that that could reverse price back to the upside. For right now, I do still see a slow bleed, but again, tomorrow is might actually flip price the other direction. Um, that being said, I still don't want to see us lose that 4-hour 200 May. Another thing that we got to take a look at is the fact that we are far away from the 21 on the 4-hour. It's not like we're getting a close death cross or anything just yet, but it could spell some trouble for the beginning of August. Which, if it is, if we do dump for the first week of August, not necessarily a bad thing because we could potentially get a bullish candle for August as well. So, um, definitely, from a timing perspective, it's still, an okay situation. It's just I was hoping that this week we would get more of a kind of a grand finale to the upside. Possibly even reaching into the 67, 500 area, taking out the bottom or testing the bottom of this order block here. As far as today goes for right now, I would be definitely watching 62414, which is basically the bottom of this order block. Kind of aligns with the 786 level as well. You'd be taking out a double bottom here. There is a potential we could get a pretty strong bounce from here if it wanted to drop down that low. Um, all of the smaller time frames are going to probably show you continuation, which makes sense because on the micro it is very bearish still. Your meso time frames are looking decent. It's just the only thing that worries me, like I said, is the 6-hour and the 4-hour. Well, the 6-hour, you're about to lose this as well. So definitely not a great sign for the meso time frames either. Your macro is still somewhat in an uptrend. If you look at your daily, until you start reaching down into these lows right here, potentially taking out some of these, you're still technically in an uptrend. You're still making a lower high here. So on the macros, the only thing that's looking halfway decent for right now, everything else is looking somewhat bearish for the day. Which is kind of what I explained to you guys yesterday is, we could still get some bearish continuation today, um, given the fact that we have our major Fed event tomorrow. That being said, guys, as far as levels I would be watching, so, since we're doing that continuation to the downside, really, in my opinion, 62414 is kind of be like your final support level before you start reaching down further into the 61s, the order block down here in the 60,000 range. I would be targeting 62414 for right now, the bottom of this order block, as a potential bounce area. Um, and there's a possibility we get a bounce right here, especially given the time of the day, but it's just not looking great just yet. To the upside, as far as levels to the upside, I'd probably have to pull a bearish 786 here take a look. So 64, yeah, that's a bit high. Let me pull it from right here. So probably around 64 even to 64,291. We could possibly get up to 64.5 if it wanted to flip. Now, if it does reverse today, the only bad thing is, like I said, the Fed event is probably going to reverse price no matter what. So if we do reverse today, get a strong move back up, there's a potential we get rejected around here and then the Fed event just drives it lower. So I would like to see it, start to consolidate and, dive down still even deeper, potentially, or at least consolidate. Ideally for the bulls, it would be a consolidation around this area. Maybe staying above the 4 hour 200 MA would be great. Um, that being said, guys, given those levels, let's go ahead and take a look at liquidity, kind of see where that's at. So let me dive into the 4 hour. Um, let's see here. So taking a look at the 4 hour, definitely diving into this pool now, and you can see how 62.4 is kind of the top of this green area. That's kind of be your last resort before we start driving lower. Obviously we can start taking out some of this yellow liquidity, drives us down to about 60,005, like we've been talking about. But I would like to see us get a bounce off of this green area if it needed to go that low. Taking a look at your hourly. So your hourly does show that there's a small bridge to, well, not really a bridge. Yeah, it's a bridge to kind of get us into this green liquidity right here. Um, you have some to the upside, and it looks like it does align with that 64.5-ish number. So I would be targeting that for the day if we were to get that reversal. It might not be a bad idea to put an order down at 62.4, see if you can get a bounce right there. That'd probably be the only play that I would do for the day. If you're not already short, that is, obviously if you're short, you're already in the money. But if you're trying to look for a long, that could be a potential bounce area. Not financial advice, but I would possibly be looking for 62.4 as a potential opportunity. Again, very high risk because you are catching a falling knife, but that would be the area that I would be targeting to take a long from if we were to reverse, just for a tiny bit here. Um, 15-minute. And as you can see, guys, like even our trend indicators, they're all at, 0 basically, I believe. Yeah, I mean, it's not really showing anything but 0 right now. So all of your time frames are basically neutral. So that indicator doesn't really see any sort of strong bias direction in the market for right now, which kind of makes sense. Obviously I said the meso and the micro time frames are looking a lot more bearish, but on your daily, you're still making a lower high, so um, it could still potentially bounce from here. Taking a look at your hourly, yeah, I mean, so you have your 100x that gets you up to about 64,000. You start taking out some of the 50x can get you to test the 200 MA on the 15, where it is right now. So 64, 470-ish area. Let me see what happens if I check off the 25x and we do some aggregation here. Yeah, so again, 25x doesn't really show anything, does still show some liquidity to the downside if we needed to still go down there. 50x does still have that liquidity to the upside. Let's see. 64,000 would be kind of the first target, potentially if you have aggregation on for the 100x. Could possibly get rejected there. So anywhere between, if you guys were looking for a short, anywhere between 64 and 64.5 looks to be the case. If you guys think that there's going to still be a continuation down. Taking a look at our order book, the bad part about this is that you got orders, but they're far away, right, on both sides. So obviously the closest order is around 62,100, only 347 Bitcoin, but your bigger orders are very far away. You have a lot of smaller orders in between. Definitely some more to the downside than to the upside. But again, when it comes to the order book, anything can really happen. Liquidity is a better indicator for where price is going over the order book, but I just try to use the order book as confluence. This is targeting that 62,100 area would be around that line that I have at 62,140. saying that we could take out this whole pool right here. So either way, guys, if you are going, if you're planning on playing a short, I would say, probably your best bet is to keep it above this 64 500-ish range. You'd want to probably dig it deeper into the 65,000s, even potentially. Again, none of this is going to be financial advice, but I'm just telling you what I would do in this situation. So 65,000-ish area is kind of where I would put my stop for a short. If you want, and then obviously entry around 64 to 64.5-ish, somewhere in here. Um, and then to the downside, I would probably put a long somewhere around 62 400-ish area, maybe 62.5 at the most. And then, obviously you'd want to protect below here. So I would say even into the 61-ish area to see if you could possibly get that bounce. So those are two potential setups for both sides. Obviously for as far as take profits go, if you're shorting it, you'd want to see it come all the way down into the 61,000-ish area. You're longing it, you'd probably want to target, I would say you'd probably want to target closer to about 65-ish area, getting that move above the 15-minute 200 potentially, because at that point, you'd be building up more liquidity. There'd be a lot more shorts to take us higher. So definitely two different moves I could see on the table for right now for today if we do get some expansive movement. Let's take a final look at the simple map here, see where that's at. So taking a look at the simple map, let me really zoom in. Again, very low volume, low liquidity here. So if you get the move to the downside, you're going to find probably some resistance right around 62.5, which is 580, which is right above that 62.414 number that I was talking about. You could potentially even get to 62.460, which would be this impulse. This could be a very strong level of support right here. So I would target 62.460 around there for a potential long. Now to the upside, you'd have to get above. Looks like you might have some issues around 63,750, 64,080 might have a problem there. 64,410, yeah, it looks like this is probably going to front run, the short potentially to the upside. So, these are some levels to watch, like 63,750, 64,050, 64,410 at the very most, it looks like, to the upside. Even this little impulse right here, 64,080 might be a good entry, almost 64,000 even. So definitely to the upside. I could see us taking out some of this to 64,080 and then dropping, right? It does allude to the fact that there is a lot more liquidity right below us, rather than above us. So there's definitely more of a potential for us to take this out first. Taking a look at our swing time frames, it will probably show around the same thing. So your bigger time frames, they kind of do show the same situation, right? So, getting up past 62,580, getting to this, 62,460-ish area where that 786 is, bottom of the order block, would be the long opportunity. And then to the upside, looking for a short opportunity, 63,750, 64,080, and then, around 64, what would we say, 64.4 around there, somewhere around there. Yeah, 64.410, I would say, for a potential short. So just make sure, guys, when I give you these levels, if you are going to play them, just make sure that you're protected well below, some of these areas, just in case, because this is treated like a VRVP, so we could just kind of fall through. But I would say, just make sure that you have yourself pretty heavily protected, depending on what pool of liquidity this wants to visit first. That being said, guys, that is what I have for you for this morning. I hope you all have a wonderful day, and I will talk to you later. Take care.